Hello guys. I hope you're sharp. Today Monday, and we're going to look at Nasdaq. And every morning on Mondays, or if not Sunday night, I make an analysis of one or two charts where I just give you something that you can just monitor throughout the week and possibly get some trading opportunities from there. So today we're going to look at Nasdaq, and these drawings we're gonna remove all of them because they're from the last time when we did an analysis. So we're gonna remove from them. We're gonna remove them and start from scratch, right? So if you're new here, make sure that you subscribe, because here this is where I basically give lessons, or I put videos where I just go through random charts and just do analysis top down, and then I give you hints as to like where you can search for trades. So if you like this style of trading, you don't forget to like and subscribe. When you're liking, at least YouTube will push this video to other people. I know some of you are very addicted to this channel, so let's get started. We always start with the highest time frame, and from there we work our way down, right? And with regards to what we're having on monthly, there's nothing new that we're seeing here, right? Because we know that this guy was taken out, and we're saying that this has got high chances of what trying and approaching this one, for as long as he doesn't do something like this and go outside this trend line or go above this area of resistance. So if it doesn't do any of that, it has got a very higher chance of what going all the way to this nice looking area of support. Maybe this is where it will restart everything, reset everything, and then go back up. So on this time frame, we can see that we are very much bearish. We still have a bearish trend line, and we are approaching a very nice area of resistance. That's where you can say we're expecting some drop there. Now let's move to weekly. And if you still remember the video that I made, guys, I said to you, monthly down, right? Weekly down. Here's the bearish trend line, and here's the nearest weekly area of resistance, which is why we have this horizontal line here. This horizontal line basically marks where your weekly area of resistance starts, because we said it starts from here, right? This is your weekly area of resistance, and we said if you've been holding those nice buy trades, once the price gets to this, you need to say, I know it's going nicely to the upside, but there's nothing that lasts forever. So which means when the price is going up and it hits a very nice area of resistance, you don't have to be greedy. Yes, it can continue and break the resistance and all this stuff, but you don't know. So because you don't know what's going to happen at these key sensitive areas, all you have to do, or the safest thing to do when the price gets to them, is to make sure that you take your profits, you stand on the sidelines and just watch and see how the price reacts there, or it breaks. Then from there, you will decide to get trades in whichever direction that comes from that. You see, because the more you force things and say it has to break it, this, that, you're going to be disappointed many times. So you just need to make sure that you're playing it safe, and making sure that when you hit the what do you call this, the next opposing structure, you are out. No need to complicate things. Now this is our weekly. We're saying because we have reached this nice looking area of resistance, we said now you can expect something like that. So if you're to get trades, you must not look past these guys here, because of what, as much as they're not really a zone on this time frame, but they need to always ask yourself that, as much as not a zone, but why did the price all of a sudden turn from there? So what if whatever that is causing them to turn here forces it to turn again? So that's why if it happens that you get trades to go to the downside, you need to be careful of those that area there. All right, and you can see that we even have what you call bearish rejection candlestick. Rejection at, it's not just a bearish rejection in the middle of nowhere, it's a bearish rejection at an area of resistance. Still some distance left before you hit the trend line, but I hope you can see what I'm trying to do. So because of that, we can see that there's indeed some pressure to push to the downside. So now let's do our H4, our daily chart. So on our daily chart, this is our nearest area of support, and our daily chart is bullish. And the last bearish trend line we had was here. It was taken out by a move from somewhere around there, and this very same area is the one that pushed up and broke the trend line and broke the area of resistance, and it changed the structure. When it did that, it had its own bullish trend, but then the problem is that the price came back and took its structures out, and then it went back to test the main support. That changed everything in the first place, and then from there, that's when it went up and restored everything. And for now, we can say we try and put our bullish trend line there and say our daily is bullish, and we have hit a very nice area of resistance, even though it's not fresh, but we know where it is located. It is located inside that weekly one. The weekly resistance, remember, it starts here, it is located there. So because of that, it's a very strong area of resistance. And when you look at the structure here and where we're coming from, the weekly and stuff, this has got a chance, like we're saying, it has a chance to go on this time frame, to go at least to this, and it can even break that, but we do not predict such. we will just say when you get to sell, when you get to this, make sure that you go out and just watch how the price reacts. If it breaks it, then you can say any pullback towards a valid area, I'm gonna sell because of what the areas that potential area of support has been taken out. So for that reason, I don't have anything that I'm scared of now. We can just free fall to the next zone. I hope that makes sense. So we have on this time frame, we have got a chance to go to at least there as things stand. Unless if the price was to turn from there and do that, but that's less likely, but it's possible. This is trading. So now let's go up. Let's go down and do what we call. Let's do a different time frame. Remember, we always start from the highest one, and then we work our way down until we get to the time frames where we can actually, get some trades where we can actually trade. So this is all that we have on this time frame, which is our daily. Now let's move down to H4. Well, let's go. All right, this is our H4, and with regards to the H4, the last time when we made the video, we were saying from around this, we want it to go back around this, right? That's why we had the drawings. We were expecting it to do that, but it wasted a lot of time. And it hit break even because I had a trade, but it hit break even because remember we were saying the level is this one here, and the level was touched, and then it went to the downside. The moment I saw it coming back and then forming the bullish rejection candlestick at an area of resistance, and also around the bearish trend line, I was like, hey, the bulls seems like they don't want to give up. You can see they tried to push up, but it was not enough for them to go until they. And then you see the bears trying to push them to the downside, and even when you look at the bigger time frames, we saw that they are trying to push them to the downside. So that's what we had the last time. So on this time frame, as things stand, we don't really have a nice area to take our trades. And because remember, we had a very nice area of trend line. We had a very nice trend line when the price was still very much to the downside, but now we had like a break of that trend. That trend line, and all of that was started by this guy here. But we're not going to use this guy to try and do that. You can do that on your own risk, but I do not encourage that simply because of where we are coming from. This is a move from weekly, daily area of resistance. So we're not going to go against that with this H4. What I can suggest you do is that it's much safer from where we are. The high odd direction will be to the downside because of what the location where we are. So currently even selling is not good because you're still inside this tiny area of support. It's still valid, it's just that we don't want to use it to go up. So I think the best thing to do would be to say maybe if the price was to go down and then move lower than this, then I'll be able to draw a new bearish trend line. Then when I have a new bearish trend line, I'll just mark this as my nearest area of resistance. You can say my H4 is now back to downtrend, and because we saw the space and the location on our weekly and our daily, suggesting that we do have some bargaining possibility of going down until there. So it means when I get this break of that zone, I can say should I get a pullback, and then I'll be targeting that guy. I think it's much safer that way because now if you're trying to buy, yes, the price can go up, but currently it's not a wise move for you to try and do that. I think if you wait for it to break, then you can try and continue selling like that. So I think we're going to end this one here. My prediction is that even though it's possible for you to do that, we are saying currently, given the current structure, it's very less likely. It's most likely going to go down to at least somewhere around there. But we will see. We will monitor it throughout the week, and if anything changes, maybe there's a new structure that's suggesting that the bulls have kind of winning that battle. I will always update you guys and say, okay, what we saw seems like it's now going in the other side and it's challenging the structures. That's why now we see it looks like the bulls are becoming more aggressive, and if that's the case, now let's move to plan B and do things this way because of what maybe the resistance has been broken or the bearish trend line has been broken. Then that's when we say, okay, the bearish side that we're leaning towards seems like it's being defeated. So because of that, there's no use in us, forcing things and say, no, it has to go down, it has to go down. No, we don't do that. The market, allow the market to correct you. When you're wrong, you are wrong. The market is correcting you, you accept that, you move on. Because the problem with some of you is that when you have a setup, right? And for instance, let's use the same diagram that I show you. I'll show you the biggest mistake that most of you make when you are trading, and you end up losing your entire account, right? So I'm saying now, if the price was to move down lower than this, all you have to do is to put a bearish trend line there, and you just have to mark this one here and say a pullback to this, I'm going to sell, and my max T piece will be somewhere there. All right, okay, fine. But now what if most people, when the price moves, let's say, does the same thing, it moves to their resistance, and then they they open sell trades, right? when they are in the open, when they have opened the sell trades at this area of resistance, and then they see the price doing this. Now the price is there. They say, no, I know it has to go down. It can still turn from this one. It has to go down. Then you see it going up. When they're saying it has to go down, you are adding more trades. You're opening more trades. Already you are losing. So you want to force the market to go where you want it to go, right? And that's where you're getting it wrong, because just because you feel like your setup is it has got higher odds of working out, does not mean it's guaranteed it's going to work out like that. Which is why stop losses and not being greedy and knowing when to cut your losses, it's very important, because you're going to say, no, it has to go down. You open more trades. No, it has to go down. But you see, it keeps on increasing. It keeps on going up. It keeps on going up until you lose your entire account. Had you just said, okay, it has broken my area of resistance, what I think was happening, it seems like it's not there, so let me take the loss, and then I still have my account, then I just move on to the next setup, then you will recover your loss. So you must never ever be afraid to cut your losses, because otherwise you're overexposing the account, because should the price carry on moving against you, you are dead. You are dead. So you must never make that mistake. So that's all that I wanted to share with you guys on this one. I think the best thing to do would be to wait for something like this, and then the pushback, you can take it targeting around that level. So that's it, guys. Don't forget to like and subscribe if you enjoy this type of content. All right, I'll see you in the next video. Thank you.